Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining me. We're also streaming to you live on yorbamedia.com. All right, my guest this segment is Nick Santiago, and he is the president, CEO of InTheMoneyStocks.com. Nick, thanks for coming on to the show.
Thank you for having me, Michael.
My pleasure. Okay, as usual, we have a series of questions stacked up in the shout box waiting for you. Do you mind if we get through those and go on to...
Okay. Not at all. Let's do it.
Okay. All right. First off, we've got a guest out here that wants to know if you're looking to short gold and silver here.
No. Right now, at best case scenario, I think you see a pullback in gold and silver, which could happen soon. But the opportunity to really go short is still a little bit away. I think that if you're looking for that long pull on the short side, it will happen, but it's just not there yet. We're still in that inflationary phase right now. The spiders, S&P 500 is moving up, and gold and the S&P are somewhat synonymous.
Are there any particular price ranges or time frames that you're thinking that you want to hone in on to get the pattern to give you a trade signal? Well,
I'll give you a good resistance level. If you're looking at the GLD, it would probably be around the 167 area. That would really be a very, very good resistance point, and you could see a significant pullback around that level.
Okay, why?
Well, it's going to come up into a pretty good gap fill from December 9th. Also, there's another gap, a smaller gap, right around December 7th. That was also the breakdown zone. What I always tell my subscribers and people that come to learn from us is that stocks or commodities, they're a lot like people. They like to visit places they've been once before, and they've certainly been around that 167 level quite a bit. So to go visit that would not be uncommon, and from there, once they make their stop, they usually go back home, and that's down.
Okay. All right. Well said. Let's move on to the next question. Copper has had a nice pop. Is Nick still shorting the pops?
Yes. Right now, we are looking to get into a short on copper. It has hit our level where we thought it would go. I think I gave you a level last time I was on your show talking about the 362 to 365 level on copper futures. We're basically there now. The problem is the volume right now is just so light, Michael. The markets are still on this little helium high. But as we get into earnings season, volume will kick back into this market, and that's where I think traders could start to nibble on some short side opportunities. Okay. All right. Well put.
Let me move on to the next question. No, that's it for now. Let's go on to your stuff. All right. Let's get into the S&P, the SPX.
Okay. Right now, really, we've seen the S&P 500 move higher really ever since that December 19th, 20th time frame. We figured the market would pivot around that area. It has, and it's really been a straight move up. The pullbacks have been very, very minimal. But if you take a look at the S&P spiders, you're going to notice that the volume on the move is just absolutely as light as we've ever seen. This volume is very, very light. If you look at this whole trading week, the S&P is trading right around 100 million shares for the day. That's extremely light. If you remember the old market adage, it states never short a dull market. What that means is never short a light volume market. And this is as dull as we've ever seen it. So hopefully next week, as the volume comes in, we could look for, possibly inch into some shorting opportunities. And the S&P is vulnerable to a pullback. But it's very tough to try to pick off this top and this kind of volume. I just don't do it.
What do you attribute the low volume to?
Well, there's a couple of things. First, one, I believe that all the institutions, or I shouldn't say all, but a majority of the institutions are looking to create the January effect. And that basically means if they could get the month of January to be positive, most people or traders out there will say, wow, the rest of the year is going to be positive. That correlation has worked, for a high percentage, I guess, throughout history. But overall, you always give January somewhat of an upward bias. Even last January, it was very, very tough to try to pick off a top, and we had really basically two pullbacks. But one thing I want to tell your listeners today is that the market likes to pivot around the Martin Luther King holiday, and we're coming up into that next week. So there's a good chance we could see a little bit of a pullback here.
Okay, I got you. I'm with you on the pullback, and the Friday the 13th has been, that cycle date has been bandied around a while. But here's the point that I'm trying to make about this volume. Do you get the sense that we're actually looking at what really is the true level of volume when it comes to the high-frequency traders? Because most of the trading public has kind of pulled back from this?
Well, I think that that's partly the case. The other part of it is, though, that we're still right in that holiday mode. The market hasn't gotten out of that, and you're just ahead of really earnings season, which has began this week with Alcoa, but ultimately really begins on Friday when J.P. Morgan reports earnings. So nobody, these institutions, they're floating it up.
Right.
Oh, let's see what JPM is going to say or do, and once the earnings start to be released every day in droves, then I think the volume will come back to the market. January, the first couple of weeks, I normally look for this light volume, so it's really nothing different than what we've seen in past years.
Okay, so the rest of the public is still they're off at the Hamptons or Breckenridge or wherever they are, and this is really just J.P. Morgan and Goldman Sachs high-frequency trading. I mean, I'm being facetious by only saying two companies.
But you're right.
Okay. All right. Thanks. I was just wondering about that. All right. Let's move on to what is this JJC you're talking about?
Okay. That's just a copper ETF. So a lot of traders out there, you and I talk about copper futures using the HG. You could, if you don't have that, you could just look at the copper ETF, which is called the JJC, which is the IPATH Dow Jones Copper Index. So basically, what I wanted to say was the JJC now is at very, very attractive resistance points right up here around the $47 to $48 level. And, we could start to see a decent little pullback in copper shortly.
Now, you've nailed this copper to like less than 1/100th of a penny on a lot of trades that I've seen you pull off on this show. So you're looking for copper as well as the JJC to move lower. Do you have a target in mind?
Well, in the beginning of this year, I think we're going to be, at least for the first couple of months, we're going to be in somewhat of a trading range. I don't think that the market really just rolls over and plays dead quickly. But copper, if you notice, or just take a look at the JJC, you'll see that it's severely below the 200 moving average, where the S&P 500 is above the 200 moving average. The Dow Jones is above the 200 moving average. And if you look at the NASDAQ composite, that's above the 200 moving average. So, the relative strength in copper is very, very weak. I think we could see, a near-term pullback, somewhere around the 42 level. I wouldn't, go crazy here, but ultimately I do think it breaks a lot lower and it takes out the October lows at some point. I just don't think we're in that kind of, that volatility yet, where we could see that type of move.
Okay. Now we got another question that showed up on the shout box for you, and they want to know about the bond market.
Okay. Well, I use the TLT as a good barometer for me. I also like to look at the TNX and the TYX, which is the yields. But we'll talk about the TLT since most people have that on their trading platform. As you know, last time I was on your show, I talked about the 116 to 116.50 level being tagged for a bounce trade. We did not get down there. I still think there's a chance to get down there, but the bond market is kind of talking to us a little bit. Today, the TLT is only down 17 cents. And you've had a nice 2-day bounce there. So, if you look at the TLT, it's really just putting in a long sideways consolidation pattern from late September, early October. And ultimately, that's telling us this thing wants to go higher in 2012.
Okay, so no big spike in rates, not yet.
Oh, no. In fact, I think ultimately rates will go lower.
Okay, and well, geez, they're going to have to do something kind of funny because there's not a whole lot lower you can go from where they are.
It's pretty amazing. We are where we are when you have the 10-year bond yield sitting at 1.93%. But believe it or not, the bond market is just holding up so well right now. It's hard to say that money is really going to come out of bonds. I just don't see it.
Okay, so the rally that we're looking at here in the bond market, do you think that's going to continue up to, say, the 146 level?
Yeah, you have a real good shot at that. I think that's almost a given.
Okay, we got about a minute and a half left. Let's talk about the USO.
Okay, there's a lot going on right now with oil. Every day we hear something about, we talked about it, you and I, about the Strait of Hormuz and the Iranian situation. There's always some type of geopolitical event today you got the first decent little sell-off in oil, but it came right into the 50 moving average on the USO, which is about right around that 38 level. That's also a gap area. But ultimately, there'll be a lot of support on the USO, a little bit lower around the 36.50 area, even 36.75. There's a fair amount of support there. So, even though oil is moving lower here, it still, has a fair amount of support right down here around that 36.50 level. That's what I'm seeing at the moment. I know I'm just getting so many emails lately about oil, and, believe it or not, the chart is holding up fine right now. There's really nothing really wrong with the chart. Even on spot crude, they have a ton of support right now around the 92, 93 level. So, yeah, we could get some pullbacks. It never really broke out, but it's still holding up there pretty well at the moment. And I know a lot of traders are itching to short it, but I think you're going to get your shorting opportunity. It's just going to be a little bit further down the road.
So at this point, being where it is, are you thinking that we may find some support and enough conviction to go ahead and buy some of this going into spring?
Well, I don't think spring. I think we're, by springtime, I think oil is probably going to roll over before that. But right now, we're trading right around $99, a little bit under $99. You're gonna chop around this 95 level, maybe down to 93, 92. But oil still, the pattern there is still pretty significant. It's still pretty strong.
Okay, well, you gave us some pretty good areas, and we're out of time at this point. But Nick, as always, a great pleasure to have you on the show.
Thanks for having me again, Michael.
You got it. All right, everybody, please go to Nick's website, inthemoneystocks.com. Look over his shoulder while he pulls these trades off. We don't call him the Louisville Slugger on this show for nothing.